production. Yes, yes, yes. What's going on, family? What's going on, guys? Welcome to today's stream with your boy Abel. Super excited to be here with every single one of you guys this morning. Hope you guys are all feeling phenomenal. Hope you guys are all feeling great. I know I'm feeling absolutely phenomenal. I know I'm feeling absolutely great, family, and I hope you guys are all doing the same exact thing and are feeling the same exact way. But let's see what we got in the building today, family. As you tune in, go ahead and drop those locations in the Chizzy chat. Go ahead and drop those locations in the chat, family. All right, drop those locations in the chat, family. I feel like it's going to be a very good one today. All right, but definitely go ahead and drop those locations in the chat, and we'll go ahead and really get into the markets, guys, and really just come up with an idea, a blueprint that we can use for today's morning. All right, I'm excited to be here, and let me see actually real quick. All right, perfect. Let's see. We got Chicago, Cincinnati, Ohio, Baltimore, Maryland, Houston, Texas. We got Vermont in the building, Charleston, stand up, Tulsa, Oklahoma as well. Grand rising to you all. Now let's go ahead and really take a quick look at the market, see what is going on, because we had a very interesting day yesterday. In terms of how the market really reacted in the beginning of the day, but then how the market reacted after Jerome Powell, was done with his speech. And that's really what I wanted to start off today's session with, guys. It's pretty much breaking down what happened in terms of yesterday, right? In terms of what, Jerome Powell actually said and why the markets reacted to it in more of a in a dovish standpoint, right? Where, everything that Jerome was saying, it pretty much brought a lot of optimism, right? It was starting to, he was speaking in a way to bring some type of confidence back into the markets, and he did just that, right? So we're going to go ahead and watch a YouTube video from one of my favorite sources in terms of really just being up to date with news, Meet Kevin, right? So we're going to watch a 10-minute breakdown, guys, of exactly what happened yesterday. And then from there, obviously, I'm going to keep my eyes on the markets as well. But from there, then we at least know or have a good idea as to what sentiment can be for sure, right? So that's what I'm going to start off today's stream with, right? We're going to go ahead and watch this video, right, and really come up with an idea of what really happened yesterday and what we should be doing, guys, moving forward to end this year, right? Again, this is just giving us an overall, a bigger outlook picture, guys, of the markets so that we are prepared for sure to trade the rest of the year and going into the beginning of next year, all right? Because I think what Jerome Powell really did, it's going to influence these markets, guys, probably for the next few months, right? So it's very important for us to be aware of this stuff, right? So let's go ahead and watch this video together as the rest of the team jumps on as well. They'll obviously be able to come on and give their ideas and their opinions, but I really want to see your guys' thoughts and opinions, guys, on what happened yesterday with Jerome Powell. All right, so if you guys can hear me loud and clear, just go ahead and drop a 3 in the chat real quick before we even go ahead and start the video. Go ahead and drop a 333 in the chat. I want to make sure you guys can hear me loud and clear and that there's no issues whatsoever. All right, so let me see. Let's see. There we go. All right, we got some threes. All right, perfect. So let's go ahead and watch this video, family, and I'll give you guys my thoughts and opinions on it as well, right? So let's go ahead and do it.
We just heard a lot of great news from Jerome Powell, and this morning I predicted that Jerome Powell would pull back on the hawkishness and tell us that we're at a level where we can be a bit less aggressive by talking the economy down and talking the stock market down. I predicted that Jerome Powell would relax and kind of back off that incredible hawkishness that he gave us in the last press conference after that reporter asked a really stupid question saying stocks were rallying when that wasn't even true. And folks, I have good news. I think Santa Claus is coming to town this year. As long as CPI comes in okay on the 13th, I think we got Santa Claus coming. And this is exactly what we predicted this morning, is exactly what Jerome Powell did. And I'm so impressed with what Jerome Powell said today, and I'm so excited by the discoveries that we have and the big bottom lines that I want to provide you. We have 3 core discoveries that we just learned from Jerome Powell. Plus, we got a beige book release. This is very, very exciting. Let's start with the beige book release, because this is exactly what Jerome Powell had prepared for him before he went into this. Only 5 of 12 Federal Reserve districts reported any growth at all. And most of them reported flat activity or slight to modest declines. And here's the thing, folks. The Federal Reserve, Jerome Powell told us this today, does not want to crash the economy because that creates human hardship. They don't want to destroy the economy. They want, if growth is usually around 2 to 3%, they want us to be around 0 to 1%. They don't actually want us to be negative. And guess what Jerome Powell told us today? He told us that GDP is basically just above zero. This is exactly where Jerome Powell wants the economy. And he doesn't actually have to be more hawkish. In fact, he has to be careful not to be too hawkish because then we go below and we go negative. So he's really trying to play this balancing act. It's kind of like flying a plane and you're trying to keep your attitude at that right level and you're like, oh, a little too high. Oh, trim up, trim down, back and forth, right? Run the trim wheel. Anyway, so what were the 3 big discoveries that Jerome Powell told us? Well, number 1, and this one's a little bit in depth, but it's worth understanding. Watch what Jerome Powell did. First, he says inflation is too high. Old news. Then, he breaks inflation down into 3 things. Core goods, which he tells us is plummeting. Core good inflation is plummeting. Okay, so part 1 of 3, solved. Part 2 of 3, he says, it has to do with housing services, which have risen rapidly. However, as long as new lease signings continue to plummet, we expect measures of housing services inflation to plummet in 2023. So in other words, goods inflation, check. Housing services inflation, so far, check. The third and last one has to do with wages. And this is because core services are mostly propped up by wages. And the biggest piece of data that we got this morning was actually the JOLTS report, which showed that we finally moved from about 2 job openings per unemployed person down to about 1.7 openings. Jerome Powell said this was actually right along expectations. And even though wage growth is only showing tentative signs of relaxing, we're not seeing signs of a wage price spiral. So while there's still some work to do here, we're on the right track. So think about what we're seeing so far. The economy's at the right place. Core goods inflation, check. Housing services so far, check. Wage inflation, working on it, but trending in the right direction. He's telling us the economy, like the attitude of that plane, right? The level of the plane is kind of right where we want it. It's right where we want it. Slowly descending a little bit on that inflation curve, right? That was the first big core. So we got the beige book where the economy is in GDP. Then we've got him talking inflation away. The 3 pieces of inflation that he talked away. He's basically telling you, look, we're winning. This was him going, we are winning. This was his victory lap before actually winning. And why was he doing this? Because you don't want to loosen financial conditions, do you? Well, maybe actually you do. Because the second core discovery was that they feel like they've tightened financial conditions substantially. He says, we have positive yield curves, real rates across curves. We're paying attention to the inverted yield curve, which is a dangerous sign that you could go into a dark recession, right? Dirty recession, really high unemployment potential. And right now, inflation expectations are stable, both consumer expectations of inflation and the market expectations of inflation, which, if you watch my video from this morning, is exactly what we predicted Jerome Powell would reference. And it's exactly what he did. So we got him talking about, hey, financial conditions are tight. GDP is where we want it. Inflation measures are going down. We're actually okay with maybe financial conditions loosening a little bit because we don't want to over tighten. Now, this was actually really, really interesting. And this was the third big discovery. Jerome Powell previously told us, he previously said in just the last Federal Reserve meeting, he said, you know, we can always just print more money if we over tighten. He said that with a cavalier attitude in response to a reporter who was saying something untrue, prompting Jerome Powell to talk hawkishly. Jerome Powell previously said, if we over-tighten, we just print more money. We loosen financial conditions again, right? What did he tell us today? He said, well, actually, we don't want to over-tighten, and that's why we are slowing. We want to go slower and hold longer at a stable rate. In two separate instances, those roughly quotes, paraphrases of Jerome Powell, pretty much guarantee a 50 basis point hike in December. He basically just told us we're getting 50 in December. I mean, we've had pretty much plenty of lead up for that anyway, so that's not really a surprise. But he also told us regarding the terminal rate that he only expects it to be somewhat higher than 4.6%. The market had been pricing in 5.2%. Well, 5.2% is quite a bit higher than 4.6. Is it somewhat higher? TBD. But based on the rest of what he's saying, somewhat higher might be like 4.8. We might not actually ever get to 5 because he's starting to recognize the human costs of over-tightening, something he's never mentioned before. On top of that, he's also suggested that our recession risk in the last set of minutes from the Federal Reserve was pegged at 50-50. But he actually doesn't believe that. He actually believes there's a greater chance of a soft landing. That is the non-recession path, or shallow recession without a big spike in the unemployment rate. So even though the committee jointly thinks 50-50, he's on the no 50 side, the no recession or shallow recession, softish landing side. What he wants to create is another long expansion, another 10-year expansionary cycle where we go from 2010 to 2020 and everybody's getting rich. And the people who get rich the most are the people who own assets. Whether you own assets like venture capital in House Hack, which has a deadline today for accredited investors, whether you own real estate yourself, whether you own stocks yourself, whether you own exchange-traded funds yourself, whether you own bonds yourself, the people with assets make money in long expansions. And it's not until the 7th or 8th year in, Jerome Powell says, that poor individuals, disproportionately Black and Hispanic individuals, start reaping the benefits. And that's because disproportionately they own fewer assets than white and Asian people. So, Jerome Powell's talk today was very dovish. It is entirely possible, and this is a risk factor I want you to be aware of. It is entirely possible that because this was so dovish and the market responded so well, that over the next few days, you end up having, we do have the Fed blackout window coming up soon for the FOMC meeting on the 15th, but it is possible that you get some kind of Nikki leaks or whatever that tries to talk down the market again. So I would caution against being too euphoric, because even though we could have a little bit of euphoria here, we're probably going to go into CPI with a little bit softness, because I promise you this, if CPI comes in dirty high, Jerome Powell's going to come right back out and go, we're wrong, we're going back up, we're going higher. He doesn't sound like that. But he gave us a warning up front in his speech. He said, look, inflation's come down before, only to go up again over this last year. And over the last 12 months, we've made basically no progress. When you look at core inflation, it's been at 5% all year. Core inflation, core PCE inflation. And he doesn't see much progress there. So there are asterisks in this. But if we get a soft read in December on CPI, and you combine a soft CPI read with this Jerome Powell we had today, the next 6 months in the stock market, I expect, will be glorious. I would not short this market. That's all I have for you. Thank you so much for watching this video. If you appreciate this kind of content, make sure to subscribe, share the video. We'll see you in the next one. Goodbye.
Family, what's going on, guys? I hope you guys were able to hear what was just said by the man, the myth, the legend, Mr. Meet Kevin. But I wanted you guys to watch that video because, again, it really does put into perspective, guys, what happened yesterday and why the markets rallied the way that they did yesterday, right? Because we've seen the markets, guys, absolutely pick up crazy, right? And it could be, just because of how, again, dovish Jerome Powell was, right? Which is why we seen gold, fly, right? We seen the dollar ended up, completely tanking, right? We seen NAS, moonshot, right? SPX moonshot, US 30 moonshot, right? We seen a lot of these riskier plays actually end up gaining a lot of strength, and that's because Jerome Powell, guys, was literally bringing in a lot of optimism, right? A lot of the things that he said was like that they are going to continue to raise rates for sure, right? They plan on continuing to raise rates, but by how much they plan on raising rates is going to significantly start to decrease. And just that statement alone is what really, the markets liked it, right? The markets ended up really liking him saying that, and that's why the markets ended up flying, right? And that's also, why I personally believe that we probably will see, you know, um, a lot more of a risk on type of environment, guys, over the next few months, right? Just because, I mean, the way inflation is starting to trend, I mean, it's been ticking down the last three readings, right? Unemployment still hasn't even really gone up like crazy, crazy, crazy. So there's just a lot of signs that are leaning towards a softer market, right? The Fed is, in my opinion, definitely going to be raising rates by only 50 basis points, and that's only going to, bring a lot of optimism, a lot of confidence back into the markets as a whole, right? So that was a very good watch, family. How do you guys feel about that, right? How you guys feel about that, right? Because I got that as very bullish, very, very bullish for the indices for sure, right? Off of something like that, that just seems like it's very, very bullish, and that's why I truly believe we're probably going to continue going to the upside here for these indices, right? So I want to position myself in a way that we can take advantage of that, right? So yeah, I would be looking, guys, for opportunities to go long, all right? To opportunities to go long on these indices if we are able to go ahead and get the chance to do so. All right. So very simple. Based off what was said, sentiment could have shifted. All right. Sentiment has shifted from risk off to risk on. All right. Very simple way of explaining pretty much how I'm interpreting the data from yesterday, right? Sentiment has shifted from risk off to risk on. Right now, what does that mean? That means a lot of the riskier assets, right? Quote unquote riskier assets, right? Are probably going to benefit from this, right? They're probably going to see, increased strength, right? We could see the stock markets, guys, absolutely continue to rebound. In fact, we could even see the crypto markets, all right? And I know this is something that we spoke about on yesterday's stream, how now, if like now is probably the best time, guys, to really start investing into crypto, right? I know there's a lot of craziness occurring in the space, right? A lot of crazy stuff that happened over the FTX drama, but you combine where we are in terms of the halving cycle for crypto, and you combine it now with Jerome Powell, right? Pretty much saying that inflation is finally going to be under control, right? And he's pretty much talking a lot of optimism back into the market. So you combine all that, all right, with the halving cycle on top of Jerome Powell and on top of the sentiment based off what Jerome's saying, we could see this thing start to fly, right? And do not be surprised, guys, if this is the lowest level of Bitcoin you ever see ever again in your life. Right now, I know it might sound a little crazy, it might sound a little premature, but you got to just trust me on this, right? Like, do not be surprised if this $17,000, Bitcoin. This is the last time that you ever see a $17,000 Bitcoin, right? So, but it just aligns, guys, with what the sentiment of the market is. All right, the sentiment of the market, guys, is pretty much now has possibly shifted, and we got to be able to, play off of that, right, and react to things like that. So that's just pretty much a little quick rundown, guys, of what happened with the news yesterday. It was very, very interesting event that happened. But now, what can we see next, though, right? In terms of trading, in terms of technicals, in terms of the chart, what can we expect next, right? Well, we do have the man, the myth, the legend, Mr. Kyle Prasad with me this morning. All right, so Kyle, my brother, I appreciate you. How are you feeling? If you are available, definitely go ahead and just say what's up, not just to myself, but to the family. And I think you also, I believe Kyle also has a setup that he wanted to show you guys as well, that I'm pretty sure he will do just that, right? So Kyle, my bro, if you are there, definitely go say what's up to the familia, for sure.
Yo, yo, what's going on? What's going on, guys? Hope you guys are having a beautiful morning. Can everybody drop a 222 in the chat if they're ready for today's stream? I want to see if y'all are hyped. I need to see everybody dropping something in the chat. So, yeah, I do kind of have something on EU here. I'm gonna share my screen. So I will do a deeper breakdown into UCAD, but I just feel like maybe we can see something like this. See if I can get my yeah. So maybe if we can see something like this on UCAD, that's what I'll be playing. For Euro USD, I'm actually kind of playing a sell right now. Honestly, I feel like this is the last. This is kind of like the last breaker bounce points to see if the dollar can make some bullishness this week, right? We pretty much opened the week, I would say more so around here, right? So, this week it can either, and it's looking like it's gonna continue to the downside, but we can't assume or marry a single bias, which is one of my rules in my trading plan, right? Even though I have a current bias, right? I can't be oblivious to possible areas where we can start making some noise in the other direction, right? So, you know, obviously, guys, as you guys know, we've been calling the dollar sells for a long time, and I'm not gonna be so quick to switch biases here on this call. I'm gonna remain in this bias, but if you wanna take a trade in the opposite direction just to hedge, like for example, let's say, you're in some EU buys or something, right? Um, you know, a lot of you guys caught these EU buys when right last time there was news, right? A lot of you guys maybe caught some trades over here, right? So, this is just a opportunity for me to see, if the market decides to, maybe go bearish off of a lower time frame breakup structure. And, honestly, what's crazy is I just got stopped out. So, if you took that, I mean, it was only about a 12 pip stop. So, I only lost about maybe like a quarter of a percent, not even a full half a percent. So it's looking like EU is probably just going to continue bullish, especially with news today. I feel like we have another news release at 10. So, at the end of the day, guys, if I were you, just like what we've been seeing, kind of don't really go against it at this point until we see something different. Um, you know, I kind of just see this thing continuing bullish at this point after we've seen this. So now I have a new bias, right? So, maybe we can see something like that. You see how a lot of times, like, if you take losses, it's not really a bad thing, right? Because this actually breaking structure, breaking this high, actually gives me a bigger picture, a better picture of when I can catch the next buy. It's definitely not going to be today, right? I can tell you guys that for sure. We're probably not going to catch a trade on EU today, but that's fine. We've got tomorrow and we've got all of next week, right? And tomorrow is actual NFP, right? So, expect a lot of volatility tomorrow. Now, GU, to be honest, the same thing, right? We're just going straight bullish, right? The only way the dollar could maybe make some noise today is if it were to bounce off of this. This is the only kind of level we're sitting at on the dollar or even close to, right? So, at the end of the day, it just comes down to whether or not this daily candle that we're in right now, which opened here, it just comes down to the market, whether it's going to close bearish or, reverse up and close bullish. It's 8:45. So, we have time till the 9:30 open. We have a whole hour and we have the 10 a.m. news. So, a lot could happen. A lot could happen. And I'm going to be keeping an eye out on the market this entire session to see if maybe we can catch some of these GU sells, right? Maybe if we can catch some of these UCAD trades, right? Man, I should have called out this entry for you guys. I had took a little preemptive entry here, but at the end of the day, this is all just intraday setups. This is kind of not really the swing move that we're looking for. So, this is not really something that I would look to call out, especially since it's all the way in profit right now. But, since I do kind of expect EU to now continue keep going up and GU to keep going up, I do agree with USD CAD to keep going down as well. So, we're not out the game completely. For those of you guys that are trading UCAD today, you guys can wait for a lower time frame, something like this in the 1 minute, right? So if you guys ever miss an entry or it's just dripping in profit and you didn't even catch the entry on it, it happens, right? A lot of the times you have the markup, you have the level, then it just plays out way too fast and it just drips in profit and you miss it. That's why I like that's why I say reaction time is very important, right? You gotta be reactive, proactive when you're on the charts, right? Whenever I'm trading, I'm very reactive. I make sure I'm very wide awake. At least an hour, 30 minutes before I even start trading, so I'm at least ready to push buttons when it comes to my zone, when it comes to my region. So when it comes to your region, you're not just sitting there staring, watching, and you're not ready to press the button. So but at the end of the day, guys, you know, that just comes with time and that just comes with missing out on your trade so many times that you're like, man, next time I'm not gonna be caught slipping ever again. So, again, I would say you guys can definitely take this trade right here if it comes up to this level. Especially since we rejected and it's kind of looking like it's gonna close the 1 hour candle as an engulfing. If that does happen, if the 1 hour candle does kind of close as an engulfing, even especially since the last daily candle, with that price action, we can start to see this drop early, right? It's possible, right? So why not play this? If you guys can get something on the lower time frame, like what I kind of depicted right here in the 1 minute, definitely go ahead and do that. It's only like a 6 pip stop loss. And I will let you guys know when I see the proper reaction. Um, but yeah, the level is 134,345. At the end of the day, it's really just a 5 pip stop, and you really shouldn't be, any trades that you guys take, it should always accumulate to up to 2% if you're losing, right? Like if you're losing, I never make myself lose more than 2% within a given day, right? You shouldn't, continue a trading day after you're continually losing and losing and losing, right? Because at the end of the day, what that's gonna do if you know that is a losing day for you, or that there possibly could be no trades today, you continually to stab at the market over and over and over again, hoping for a win. That's actually gonna give you the more losses, more losses. But those wins are the wins that you really want to preserve. Like there's not gonna be a lot of wins in trading, right? You're not gonna win every single day. Right? That's what you guys have to understand. There's gonna be maybe like 2 or 3 out of the days of the week that you win. Sometimes maybe even less, right? So you need to at least be able to maximize those winning days and those losing days, minimize them as much as possible,
Mm-hmm.
right? So you don't want to maximize your losing days and maximize your winning days, right? Because you're going to end up cutting into your profit that you work so hard for. So, I'll tell you guys less is more, right? Less is more at the end of the day. I don't call out too many trades on here, but when I do, it's definitely gonna be something quality. And I could definitely say the same for Abel. I could definitely say the same for Ray. I could definitely say the same for Skaggs. Just hopped on here. So with that being said, I will, still be on here, taking a look at UCAD. I'll be eyeing it. If I see something that's juicy and I want you guys to take it, I'm gonna come back on. I'll mute my mic. Um, but yeah, I just feel like, man, just dollar is just on a tear today. It's kind of just, I feel like maybe there will be an entry on like the daily or something like here. Like it would do something like this today, like maybe go up and you know start playing into some of this candle right here. Like I feel like today would be a day that it does something like that.
Mm-hmm.
Same with GU,
Mm-hmm.
you know. Let's see. But yeah, I mean, I kind of want to hear some thoughts from Abel or Skaggs about the dollar, right? While I go ahead and check gold, because Jude was
Stop
asking me.
trying to buy it.
I mean,
Stop trying to buy the dollar. Okay, so
with the
I don't know. I don't know. I mean, it's just my opinion.
if you did you watch the did you just watch the video we put on, Kyle? Like, would you?
yes, I did.
All
I
right,
did.
with my guy, me Kevin, he pretty
Yes,
much
I
just
did.
said, right, because he was explaining, everything with Jerome Powell, and Jerome Powell pretty much is calling for like a shift in sentiment right now, right? So we definitely got to be mindful of that, where dollar strength is probably not going to be as strong, just because of his comments were that they're definitely going to lower rates, or they're not going to lower rates, but they're going to lower by how much they're raising rates, right? So there was just a lot of optimism in his speech yesterday that's definitely going to cause for more of a risk on type of environment where dollar is probably going to continue to get weak over time. And depending on how CPI comes out, right? CPI data next month is really what's going to be the overall deciding factor on if the dollar truly is going to have this overall change in sentiment, or if it's gonna go back to what it originally was, right? So we really just gotta be patient and wait for the CPI report next month. But as of right now, it's definitely leaning towards a lot of dollar weakness for sure.
Yeah, I would say CPI next month below 7.5%. I'm
I
telling you, it's below 7.5%. This is why I've been holding long-term buys. I listen, I woke up, my job is done. My December is done. Powell solidified it for me.
yeah, that is interesting for sure.
Um, I'm a hijack real quick. 1 second. I just gotta open up trade. I literally just got home, family. I'm sorry, I'm a little late.
Big
So
hijack.
I think pretty much what Skaggs and Abel are saying is that this candle right here, they're more so leaning on the side that these lows are something that's most likely going to get wiped today. And I feel like definitely after the reaction that we're getting from this level right here, it's probably definitely going to break. Unless we get something
Yeah.
astronomical today. But let's see.
I mean,
You
even
guys
if
are
even if we don't break today, which is very possible, I do fully expect those lows to definitely get taken out, for sure. Whether it happens today or whether it happens next week is irrelevant. It's more so the overall direction for me now is definitely gonna expect more continuations lower here in dollar strength, dollar weakness for sure.
Yeah, I would agree. It's not about today. It's not about today. Today's trading day for most people should probably already be over, right? The market's already made a lot of continuation moves from yesterday. It's not this. It's already over.
Yeah.
People that are selling and playing the fades off of here in the fresh liquidity. You know what I call those? Those are FOMO traders. These are people that miss the buy. They're not benefiting off the buy, so they feel like they have to sell. So yeah, they're not really doing anything good. They're emotionally reacting to the market because there is no sentiment anymore, and there hasn't been for some time on a bullish dollar. I mean, as you guys know, again, I've been holding very much long-term buys for what's now like 2 months. And again, I continue to stay on this buy, so I have not closed these trades because again, we've been expecting some sort of potential sentiment shift. You know, when we took these CPI trades 2 months ago, you know, it was off the idea of inflation becoming stagnant, right? Not really going up anymore. And then we got the continuations when CPI came below 8%, right? And now you have Powell that's going to begin to, you know, say things that, you know, lean more dovish. And this is why I always tell you guys is rumors over news, because the rumors of all this were circulating again back over here. And then now that it's hit the market and it's actual news, everybody's kind of left thinking, oh, what do I do? What do I do? What do I do? You know, and it's like, well, you got to stay ahead of the market. All right. And this doesn't really help the newest person on the call today, but I do want to give an update for the people that have been here every single day consistently for months. Somebody says, Happy Thursday. I'm confused with the time frame. What should I be following to stay with the trend? Each form may show uptrend when lower time frames show down. I mean, that's all subjective to the type of trader you are. The longer you want to hold your trades, the higher time frame you want to deal with. The shorter you want to hold your trades, the shorter time frame you want to deal with. I use all time frames. I go weekly, daily, 4 hour, 2 hour, and then 5 and 15 minute. Right? You guys can see that at the top of my screen. Right? Weekly, daily, 4 hour, 2 hour, 15 minute, 5 minute, and occasionally the monthly. Like we're now, it's a new month, so we check the monthly. So yeah, the time frame is entirely up to you, right? Myself personally, I trade daily and 4 hour. But again, I'm gonna say this because I'm a cycle trader. I don't follow the trend. I don't care to follow the trend, right? I care about the new upcoming trend, which is never gonna be apparent on the chart, right? I mean, you're gonna have reasons to believe it. You're gonna see your cases for accumulation. You're gonna see your cases for distribution. But overall, right, you're like there was no me at this point when I entered EU down here, right? There was no data suggesting the entire trend. There's just speculation and rumors, right? So that's what I thrive off of. If you're looking at this now and you're like, okay, well, yeah, we're creating a higher high today, like you're just late, you're like later to the party, and it becomes increasingly harder to trade. Now, a lot of this stuff didn't pull back as far as it wanted me to get you guys in. Again, you guys know I was waiting for EU to possibly come down here, and I was waiting for like the NASDAQ to kind of do the same. Although, to be fair, the NASDAQ definitely grabbed this liquidity, I guess, which was, you know, enough with Powell's speech yesterday. We were hoping for a potential spike down of Powell's statements, but it just never happened. But yeah, I just really wanted to come on here and tell you guys again, like looking the opposite direction doesn't help you. This is why I kept saying, like, even though I see, you know, sell setups on EU, I'm not concerned with taking them because I know that's not my sentiment. That's not my direction. That's not my long-term bias. And it's not really, again, supported by that much data. Why is this disconnecting? Hold on, let me close trading view on my laptop here. Okay. So yeah, I continue to hold this stuff long. The only other thing I'm looking at still is GJ. GJ is probably a pair that you guys can continue. Let me get to all this old analysis off my chart. But GJ is probably one that hasn't really longer term broken out that you can maybe still take advantage of. Again, we are looking at longer term buys potentially on this. My biggest concern with this, because I do want to try to buy it up to this 169.80 area is kind of still where we're looking. My biggest problem with this is going to be my bias that as the Fed begins to slow down, my expectation is that the Bank of Japan will also look to pivot. We talked about this months ago. Again, you guys can go back on the Sunday calls if you're really curious. We talked about this months ago where I kept saying once the Fed begins to slow down is when I suspect the Bank of Japan will begin to increase its rates. I still think, again, we're probably a couple of data points away from that. I don't think we're immediately going to head that way. So I am looking at GJ. Again, you can still look at like, you know, 300 pips of potential opportunity on GJ. I did end up buying this, you know, late last night. I think I took it right at like the London Open. I was up at like 3 o'clock. So I am trying to swing this up to the 169, 170 area. which is kind of where my long-term short does live. I actually do have a short that's active from up here, which is again kind of concerning to me because I'm looking to, buy up to where my long-term short is. But again, this is just partial profit, so I don't really care. But we were looking at yesterday on GJ, again, when we took those shorts, we were looking for it to kind of pause inside of here and potentially give us some buying. That ultimately did not work out. Got some nice reactions off of it, but it just wasn't sustainable into the Asian session. And now we've kind of completely erased this move. Not really on decent volume, to be quite honest with everybody. Like the volume really not upticking, but I do suspect with NFP that becomes a possibility that we do clear above here on that. But what we were looking at yesterday was, again, a wipe of these lows, right? A wipe of this little reaccumulation. Now that we've got this wipe of this reaccumulation and we created some, decently strong lows down here, I am looking at, again, continuing to trade GJ to the buy side. So what I'm going to tell you guys to keep your eye on, again, we just wait for the subcycles to wipe. So again, I mean, who knows where this ends the day? This could end the day much higher. It could end the day. I mean, I would be surprised if GJ doesn't have the steam to get above here. We should be able to push up into like the 167.20 area by end of day. So I mean, if you want to trade off this little smaller cycle here and use this as a stop, that's entirely up to your own risk. But after this does make its move to the upside and we clear, this high, then we'll wait for the next pullback, which I suspect will be lower than current price. So I do suspect that price will probably come back down and play with this little range, much like, again, we played with these lows after it's kind of made its move. So I would keep your alerts set on GJ for below 165.45 if you guys are not yet in this. Or you could, again, trade it aggressive off its current action, but you're late to that party. So that's the only really thing that I see longer term that can give you like, 200, 300, maybe even 400 pips of potential movement there. Let me see. Looks like oil could be setting up for a sell. Yeah, we could take a look at that. Would you say re-entry around 164.25? 164.25. Nah, man, if this is a strong, if we consider this like a strong low or climactic low, which is the way I would like to find it, then 164.25 is way out of the question. Again, I think the more likely entry is right below this, 1 minute, 5 minute reaccumulation in this little inefficiency. Maybe you do get a little deeper to this candle, but I would expect something like this, maybe. Again, though, this is not going to magically just, turn around right now. It's probably going to want to come up and capture structure first. So you're like, me explaining this to you guys, I know it's going to fall a little bit on like deaf ears because, again, I know the path to that level is going to be like something like this, where like most people are just not going to have like the patience to wait for it and or forget that I'm telling you about it now. So I'll of course keep you guys updated as it moves around if you guys continue to hop on these sessions. But yeah, I would say that's the path for GJ. Somebody's asking me about oil cells. I've told you guys this is not
Skags,
really...
before you even get into those oil cells, I mean
Yeah, what's
family,
good?
being
Back to
family.
GJ?
No. You can stick on the oil,
Oh,
but
okay.
I don't want Skags to give you guys any type of value until we get 100 likes, family. We got 120 plus people on, only 50 likes. Let's go ahead and get those likes up, family, if you guys want to get more value. All right, I hate to do it, but I have to
I
do it.
mean, if you're gonna like the stream for any reason, like it for the fact that I'm riding a 1 to 55 risk to reward trade.
Just like the stream. Just get these likes up before you guys want any more
If you've
value.
never if you've never seen a 1 to 55, you might as well hit that like button.
Yep. Let's get it. We need
What
100
is
likes.
NASDAQ for me? NASDAQ still hasn't even breached this high. Technically, I'm not even seeing any more 1 to 36.
We need
EU,
100 likes. If you
EU
got,
the breadwinner.
if you guys want some more ideas, because I even got a nice banger that I'm looking at here on potentially on gold and euro. Right, so if you guys want a few of these bangers, family, we gotta get the likes up. Let's get the likes up. Let's get it. Appreciate you guys. Love you guys so much for doing that, by the way. Let's go. All right, guys, you can go ahead, bro. All I have confidence that they're gonna get us 100 likes in the next 5 minutes.
Yeah, I got confidence in them too.
Let's go.
All right. So yeah, looking at oil. Yeah, I don't. It's not that I don't see the sell setup potential. Again, like you guys know me, bro. Like I'm not gonna look at something because we can all day, right? I can all day. I could force anything you want to see on this. I can make it make sense, right? We could talk all day. How about this is gonna fall off the fair value gap and play off this candle, and this is gonna go bearish, and but like I'm telling you, the likelihood of that is low, is low. Just because you can explain the setup, don't mean the setup gonna be valid. If I was gonna look to get back into this trade though, again, obviously I'm gonna want to get a discounted price. So obviously I do need this to fall before I consider even getting back in. And I'm so mad I let go of my buys from down here, bro. That's so unlike me. Regret, family. This is why I don't close my trades. Let's see what we got. So yeah, we talked about this all week, how this was a reaccumulation, how it was going to come play up into this zone at the very least. We've seen that. It reaccumulated more and moved up. Likely, okay, we're already taking that. Yeah, so the only logical entry I see, again, is when you wipe these subcycles. So I would probably set my alert below here. Let me just delete some of these other useless lines and zones. This is a useless line. Those are all useless lines now. So I'm going to just set my hourglass here. And this is where I'm going to wait for price to come back down to before I look to get a buy. And again, does that mean it's going to come down there? No, much like EU. You know, EU never really pulled back to my area. But I'm not touching this thing until we get back to 78, 78.44. I would say if you are looking for like the fade off of this fresh liquidity here, again, I think again, this is an emotional reaction, right? The people that are feeling like they need to go against the main momentum here at the highs. Again, these are FOMO traders. These are people that are waking up, they're seeing the bullish reaction, and they're mad they didn't get up earlier. They're mad they're not in a trade, and they feel like, oh, well, if it came up, it must go down, which is a terrible logic to play with. But I could see why some people maybe would want to sell. For me, though, I would need to see. There's a lot that I would need to see. I would need to see a lot of sell volume come in. It would need to supersede both of these levels. So we need to see a volume profile that supersedes both of these, or return back to the range. You would need to break below this on lower time. There's just a lot you would need to see to justify a valid sell on oil. Otherwise, the bulls are going to just keep taking it. So for people that think that they see sells here, I disagree. Excuse me, I had to sneeze. Let me see. So again, I do think, again, people that are looking at sells on most things are acting from a state of emotions. That's for sure. Again, like the people that are selling up here, again, you might catch some wins because again, you are trading in fresh liquidity. Like it's not uncommon for the market to leave a wick here. But again, you're you are against the main bias, which ultimately will lead to either a loss or a break even. So yeah, I don't really have too much for you guys other than you know, that future GJ trade, especially going into end of week. You guys know me, NFP is a day off for me. I don't trade NFP. I don't care what NFP comes out at. I don't even care about the data. I don't even like the jobs numbers don't really make a big difference to me when inflation is running rampant, because there's a lot of people that are working multiple jobs. There's a lot of people right now that refuse to work a job because the whole anti-work movement, which is kind of crazy. You know, so jobs numbers to me, again, they mean very little. I just care about the CPI and I just care about Powell statements. So I'm not going to really look to play that. But if anybody has pairs they want me to go over specifically, throw them in the chat. I'm going to say me specifically. So I'll look at it from a white call, from a supply and demand standpoint, let you know where the next smart entries could be. And we'll go from there because again, today the markets are already moving. There's nothing really for you guys to look at. Yeah. Oh yeah, yeah, I'm also in gold. But my gold entry is not as nice, so I don't like to flex it. But yeah, I am also in gold from way down here.
Mhm.
This was actually funny enough. This is gonna go against what I just said because I did take this trade post NFP. This was whenever NFP, this was November NFP. So I've been holding this about a month now. This is actually a trade I did take right after NFP, and that's because I had suspected I already missed the trade. But once NFP began to like spike down and started to erase, I was like, all right, this is my opportunity to get into gold. So beyond what I just said, yeah, we are also holding long-term buys on gold, which are up about 1,500 pips. Sheesh, bro. My swing account is really like you could make a movie on my swing account right now. No cap. My ego running strong today. I don't even care.
I love it.
All right, Jay says GA sells at 180. Let's go take a look at GA for you.
Yo, just a heads up too for anybody that was on when Kyle was talking about USD CAD. It went right up into that area he was talking about, and has now give us a nice little play off of that.
No cap. Let's see what's up, man.
Smaller
I'm in that.
1 minute time frame, Skags. He was on the 1 minute
Oh
bad boy.
yeah, I should have knew better.
I took that as a hedge on my EU, man. I knew for some reason, the buys would continue. So I was like, man.
Yeah, this one hasn't really moved. This is also USD CAD again, another really, kind of fantastic pair to go short on because listen, I just told you guys, what did I tell you guys? I'm bearish dollar and I'm bullish oil. Right, I'm bearish dollar, bullish oil. Right, that screams nothing but downside for USD CAD if we're being honest.
Look, I had for those of you guys that took it,
yeah, look at that snipe.
Should be flowing a little bit. Once it breaks this, I'm going break even. So, once we break that, guys, if you guys did take it, I have a feeling, maybe Jude or some of the USD CAD guys like Shane, like there's a lot of people that just trade USD CAD that are probably in this. So, or maybe I mentioned it and you took it, but with that being said, I am in it and I'm gonna go break even around here. But yeah.
That
Hopefully it plays
break
out.
Even, not a bad idea.
No, once we break,
what's your target for it? Are you just swinging it?
I'm gonna take a lot of profit once we get down to like here, the 1 to 9, 1 to 10, and then
take that 30%, bro. Let's 70% ride.
Yeah, I'm taking
a this for a month.
Yeah, I'm taking maybe like 30-40%, and then I'll hold the rest pass down here.
He casually said, "Hold it for a month." By the way, hold it
yeah,
for a month.
Nah, chat. Bully him into holding it forever. Tell this boy not to.
I don't know, bro. I don't know because
bully him. Tell him I'm telling him not to.
You know what's crazy? This would have been the entry that I could have held for like a month.
Yeah, well, you don't got that entry no more because you don't listen to your boy.
I closed down here though. I closed down here though, so I'm not mad. I'm really not mad.
Tell this boy to hold.
Yeah, that USD.
I'm not mad, but you know what? I'm getting another entry right here. I could hold this one, so I'm gonna hold this one. Pass down here. Probably to down here.
Listen, pay yourself that 30%, bro, at your TP, and hold the rest of my name, please.
I bet. So, for you guys that are in this, that's what we're gonna do. That's exactly what we're gonna do.
Listen, I'm gonna turn everybody into this call into a swing trader, bro.
Listen,
you're gonna have to learn eventually that
I'd rather get in and out. I'm not even gonna lie to you. I'm more of a get in, take my bag, and call it a day.
I'm slowly turning into like
I called it a day 2 months ago.
I'm slowly turning into like a mix of both. So like
a mix of both is honestly that's even what I am too. Because again, I do book intraday, partials on these.
So what I've been doing is just doing the same thing, the intraday, like what I'm calling with you guys right now. And I would take really like 50% of my profits intraday, and then I'll hold the rest for swing and adjust accordingly. So, I
Mm.
kind of have like a mix of it. So,
It was crazy. Lately, I've been literally just catching some short term scalps, you would call it. Literally on the 1 minute, 2 minute, 5 minute time frame is where I've been at. And that's been absolutely beneficial for me. You didn't say call it a day months ago. That was low key a flex. This guy's Skag said I called it a day a month ago.
2 months ago, yeah.
yeah, that's
That's it,
crazy.
bro.
Yo.
2 month holds, man. Listen, and I get the benefit from all the long term stuff, bro. I don't have to, I mean, I still do because I'm a degenerate. I have multiple accounts. Like let's be real. It's not like I've actually taken any days off, but I could have. I could have.
Now,
Uh,
what's the benefits from swing trading like that though? Besides maybe less,
Peace of mind
I
when you
was about to
lose.
say less
Right?
stress
'Cause
on your
I could
mind.
take so many losses, bro. I could take so many new trades and lose, and I don't care because I have these to as a market hedge.
Hmm.
Like it's just peace of mind. Like there's my emotional control when I have a swing like this is beyond anything. Like nothing can phase me when you're over 1,000 pips in profit across more than three pairs.
Yeah,
So
no, it makes sense. I mean,
nothing can phase. It's the psychology.
and that's what I
But I will
figured it
tell you,
was.
holding like this,
Also,
especially if you haven't done it before, will be a psychological challenge in itself. So if you're new, like that first trade that you hold for a month, 2 months, that not only do you hold, because you can't just hold a trade for a month and it work. That's like let's clear that up, right? That's not how it works. You obviously have to be, ahead of the market news and all of that. Because again, when I was buying down here, again, like from that CPI session, like CPI came out pretty high, and there was reason to believe the Fed would continue to, potentially stay aggressive. I was playing something called stagflation, where the idea was that the inflation was not getting any worse. Not that it wasn't getting any better, but it wasn't getting any worse, which is an early sign, again, that it will potentially take a turn. Because like you got to understand, even things like CPI, right? Like let's just really quick kind of like mark this out, right? Like let's say these are like CPI numbers, right? Like this is 3% CPI, this is like 7% CPI, and then like this is like 9%. Like this is like your grid, right? Let me actually will make like a little chart, right? So like this is like your time in the market, and then like this is your, you know, like this is like a little chart, right? So as like CPI goes up from 3% up to like 7%, and then peaks at like 9, and then it like, it's the same idea. Like the market needs time to quote unquote like distribute, or what we call go stagnant in like CPI. So it's like when everybody said like CPI potentially peaked at 9%, it's like, okay, like, yeah, we'll see. But the fact that you had like multiple readings come out back to back to back, and it wasn't getting any worse, it wasn't getting any better, makes you believe that, it's going to go one of two ways. It's either going to like tip a little bit higher, or it's going to tip a little bit lower. And again, I was playing in the rumors that because of how aggressive the Fed was, that the likelihood was that you're going to tip lower. So like now again, we're probably going to be on this downward trajectory. It might be slow. We might have a little bit of upticks where it goes up. But ultimately, again, I believe that we're in like a new cycle for CPI. So you got to kind of think of like news results like that as well. Sometimes, you have like a what's called like a spring inside of the inside of the news reading. And that's kind of where my mind was at. But anyway, let me go back to GA because I was doing some analysis on this. I don't think I really see the sells at 180 that Jay was talking about. Um, yeah, the reason being is like the sellers really haven't been able to capitalize off of any of their efforts. Again, we have high sell volume here that wasn't enough to break any structure, so there's no real like sign of weakness inside of here. Even this sell volume really wasn't able to do anything. Again, massive sell volume only drove prices higher. And then even after this point, I mean, like, yeah, the bulls for a while were like declining. But again, look, every time the sellers upticked in volume, like what happened? Nothing. Nothing happened. Look, uptick in sellers, uptick in sellers, and like, yeah, this is moving down, but it's like it's just taking out what like Ray would call like internal range liquidity. None of this is an important market structure point. So for me, like I would continue to probably stay buy side on this. Does that mean that you won't get like corrections deeper? Maybe not, but I would say like me selling off this 180 area, like would you get a reaction up here? Yeah, probably. Do I think that holds and like produces a new low? No. No, I do not. So yeah, I don't think I like selling off the GA off the 180 area. Sometimes when you guys see moves like this, everybody's like, "Oh, well, I'm gonna find the best place to sell." It's like, why don't you just find the best place to continue that momentum? I'm willing to bet if you guys trade more continuations than you do reversals, I guarantee you'll probably see an uptick in your win rate, right? Because most traders are taught to like look for a reversal, look for a reversal, look for a reversal, look for a reversal. It's like, man, like just flow with the market, bro. Stop trying to fight it,
Hmm.
So I don't see a
That's
valid reason to
that's
fight.
that's powerful, bro. What you just said, because that is so true. Right? I think by default, just because like the things that we're taught, like support and resistance, and don't chase the momentum, things like that, causes us to be those reversal traders by default, which is kind of crazy.
Yeah, and then look at most strategies that are told. Most things use Fibonacci. Fibonacci is expecting a reversal to some degree.
Hmm.
Um, Divergence again. That's a reversal technique. So again, most people are taught how to again spot reversals, and that's why most people fail because again, like the market does range more than it trends, but when it does trend, the retracements are very shallow.
Hmm.
So yeah, most think it's too late to buy. That's like another thing. Like you can't like the market will the market will stay irrational way longer than you can try to justify it. So,
Hmm.
it's to each their own. Again, like I know the way that I trade is often not seen as like, you know, either not the best, but it's often questioned, right? Like a lot of my long-term trades, people are like, "Oh, I don't really see it." It's like, well, of course you don't see it because you're not looking forward like I am. You're just looking at what's happening now. So continuations are the way to go for sure.
Yeah.
Um, yes, EVG just said
Continuations are
reversal.
reversals on the lower time frame. Stay woke.
Yeah, I mean, trust me, like I trade a lot of reversals too. I mean, every trade that you take, more or less, you are expecting some like sort of a reversal. Like I'm not telling you guys to chase when it's moving up. Like that's besides the point. Like even if you were to like buy this here, like you're expecting price to quote unquote reverse from this candle, right? So yeah, like don't take what I'm saying so literal. But obviously the momentum here is to the upside. How many people like I know so many people that quote unquote trade smart money concepts that probably got wrecked here. I'm sure so many people were like, "Oh my God, an order block formed after we filled all the imbalance. It must sell." Like, must it though? Like, no, no, it must not. So again, you got to take stuff with a grain of salt. I don't. The point is though, I don't think GA here. Again, we'll give a worthwhile reaction. Will it react off this level? Yeah, because you're taking fresh liquidity, you're trading inside a liquidity pocket. Of course, there'll be some sort of cycle, some sort of reaction off of this, but I don't think you will live for the long term if you short off this. Let's just catch up with chat. Any
What you think
predictions for
about
NFP
AU? Has
tomorrow?
anybody looked at AU today?
I haven't been, but we're pretty bullish. I think. Let me just catch up with chat real quick. Abel or Kyle probably have a prediction for NFP, or maybe I don't though. Let me see. Uh, exact swing I've been trying to learn, guys. Swing trading is no different than your normal trading. It's just a higher time frame with more patience and discipline.
I
Don't
feel
have to
like
change.
AU probably just gonna continue up for the day, bro. To be honest.
All of these are going to continue up. I second this kind of mindset. Shout out to you, Cove.
Yeah, man. We're gonna continue seeing AU to
So meme is
buy.
leverage over the markets. Yeah, that's a fact. Okay, here's a question for you, Abel. You really should answer this. Let me just make sure there's nothing direct for me that I can answer real quick. Okay, yeah, Abel. So Oscar asked you, so how come you don't swing when you know the long-term sentiment of the market or do you like to close most of your profits? So he's asking like
No, I get
again,
it.
like 'cause
That's
you again you're a sentiment trader, so
yeah. I mean, that's a very good question, right? And it's just lately over the past couple months where I've been definitely on the smaller time frames, grabbing a lot more quicker opportunities. And the reason why I think that I'm switching to more so this like lower time frame bias is honestly has to do with you guys. And I'm gonna be honest with you, is because us doing these live streams, I want to be able to come on here and actually have setups and actually have opportunities for you guys to take advantage of, right? So I've really been shifting a lot of these lower time frame opportunities, even though I do understand longer term shift sentiment, mainly just to cater to y'all, all right? Because if it's me on my own in private, I mean, I have no issues holding out longer positions, longer term trades, right? I mean, I'm coming from me being more of a swing trader, anyways. Like I'm known for holding, trades for a little while, especially when I'm able to find the bias, and that's really how I've been trading for the past few years was with a swing trading approach. But being on YouTube, being on these live streams, I want to make sure that I am able to find you guys some dope opportunities to take advantage of, right? And the reality is, if I'm looking at a higher time frame, bigger picture things, I can give you guys my ideas and my sentiment, and I can give you guys certain, areas of interest, but I'm not able to execute live in real time with y'all just because of wherever we're at that point in time. So a lot of reasons, especially lately over the past month or two, I've been more so smaller time frame just to really give you guys opportunities to go ahead and find some dope setups, right? But I mean, yeah, if you understand long term sentiment, then you do have a big advantage. I mean, think about if we held, since last year when we were calling out, long term buys of the dollar. All right, think about if we held a lot of these, positions that we've been calling out, consistently, right, accurately for the past 12 months. Yeah, our accounts would be absolutely crazy. But I also do see, for me, I can't hold no 30-day trades, right? My mental is not set up for that, But so yeah, mainly though, just to answer your question, lately I have been taking a lot of shorter term trades just so that I can get you guys some opportunities and I can find some setups for you guys to take advantage of. All right, but if you understand the long term sentiment, there's no issue why you can't hold, long term positions for sure, as long as your mindset can hold it. Let's see what else we got here. That was a good question though, by the way. Now,
I think Ray wanted to go over AU. If I'm not mistaken. I just want to make sure because that boy Ray is on here now.
yeah, for sure. I mean, just to answer real quick about NFP, guys, I'm really not too concerned about the actual NFP numbers as I am the unemployment rate. Right, I'm more focused on what the unemployment rate actually comes out as, which is also on Friday, compared to what the non-farm payroll numbers actually come out as. Right, so I'm focused on unemployment. I want to see how that actually comes out. Right now, we're at 3.7%. Are we going to see an uptick in unemployment? Um, that's what I would like to see, right? That's what it's just going to continue to bring a lot more optimism back into the space overall. So we'll see, right? But again, just to answer that, yeah, I don't care about the non-farm payroll numbers. I'm more so going to be focused on what the unemployment rate comes out as. Let's see. Yeah, so Ray, bro, if you have anything you want to analyze, Ray, I'm not sure if you do want to take a look at that AU and give us your ideas behind it. That would be pretty cool. Cause I think I'm similar concept, right? I think a lot of these assets, a lot of these pairs, guys, are definitely going to continue in this bullish trend that we've been in. All right, just to touch on what Scabs was talking about, right? Looking for the continuations, right? You got to really start to consider, guys, what is the path of least resistance? It's usually going in the actual trend, right? Staying with the momentum, staying with the trend is always going to give you the path of least resistance, and that's really what you want to just continue to ride out, right? Ride out that path of least resistance, and it's gonna, truly, truly benefit y'all for sure. All right, so let's see. Yeah, I'm not sure if Ray has anything to go over. Okay, yeah, I think he do.
Yeah, what's good? What's good, everybody? Um, I want to take a shot. Um, you know, might be an unpopular opinion, but I want to take a shot at AU sales, and regardless if it even goes this low, that's just like a you know long-term potential target. I'm really looking at these lows to go primarily. Maybe fill in a little bit of this price action here. This is just like a best case scenario down here. But reason being, is just because I see, supply holding up, all the way down. It's kind of like we've been reacting off of this supply chain. So I see the same thing happening essentially in this area here. All right. So with that, I would like to see some reactions out of this buy before the sell. Did have like a large area of imbalance that is starting to fill in. Could push a little higher into the buy to sell candle itself, because understanding that this candle did take liquidity, then it started to run lower. I do feel like there's an area in here for the market to mitigate, because like I said, mentioned before, we have been, respecting this supply chain where the market is sweeping highs, making new lows and pushing back into that area, right? Then here we sweep highs, make a new low, come back and push into this area. So here we sweep highs, make new lows, and now I feel like we're pushing back into this area. And this is even what I was looking at yesterday, when I mentioned the AU sales from here. And I didn't get the final target on my AU sale, but I got enough of it. If I would have bought where Skaggs had mentioned it, I probably would have caught that entire buy move. But it is what it is. But for me, I always wanted this to be a short-term buy and see a longer sell, just due to the fact that I was targeting these highs here. So me actually targeting this high and this high, since we did pop above that area, and now we're starting to show some consolidation. I do want to think that the market is, consolidating a little bit to actually come back down, since we did sweep those highs and essentially are making like a strong high on the higher time frame. All right. So obviously I see what the market's doing. I do want to take a shot at this though, just because the risk to reward is there. So I got in with, a decent stop loss. It's not the smallest stop loss. Maybe we can get a reaction there, and I'd probably, take a shot right here as well, just to see what happens. And just the way that I trade, I trade about half risk per entry. And the reason why I do that is so that I can take multiple shots at a trade opportunity without over leveraging my account. All right. So, even if I was to lose 3 trades in one day, I'm not experiencing significant drawdown in the balance. So just with that, I personally recommend trading 0.5% risk per trade, especially if you're on a larger account, if you're on a funded account. It's just a good way to, grow your capital, especially if you have decent targets. If you have indecent targets of 1 to 5 minimum, that could be a very solid trading plan for y'all. So again, I'm looking for this high to be protected. Hopefully, I do see, some potential within this candle. I'm interested to see what'll happen there. So yeah, maybe the market comes and takes this high, pushes up into, like the 6867 region. Like 6867 area. But yeah, I'm looking for a short opportunity. Like I said, just to be able to get something out of this supply zone. But if it breaks, obviously, I know I was wrong. And that's all trading is. It's just you forming a hypothesis. If this happens, then that'll happen. So, win or lose, you can be okay with the outcome. You don't want to take unnecessary trades. And obviously, we do have some bullish momentum. But like I was saying, reversals are all continuations on one time frame or another. So, this could definitely look like a big reversal. But if I was to come to, say, the daily time frame, you could argue that this is a continuation on the daily time frame. So just with that, me looking at the fractal nature of the markets, you know, I have to, respect this buy to sell candle that made this new low. So, that's why I'm looking to take a play out of there. All right. So that's about all I'm looking at personally. There's some crazy news yesterday that I missed out on, so I was pretty disappointed about that. But yeah, it looks like AU is gonna be my pair this week. So that's all I'm taking a look at.
Hmm. Nice. Let's see. Yo, they have a question for you, Ray. They said, did you enter already?
Oh yeah, I did take an entry. Um, I took an entry with like a 25 pip stop
Hmm.
to see if I can get a reaction out of this area. Um, and again, if this entry doesn't win, I'll probably end up taking this one because every trade I take isn't a win like right away. Like, and again, your risk to reward and the amount that you're risking per trade will allow you to attempt one point of interest multiple times. So, this is a bigger point of interest. Obviously, this is, you know, we're talking about a 70 pip point of interest. So, this is obviously a large area to cover. So, if I was to refine that point of interest, then I'd only be looking at this candle. But I do know there's a chance that we could drop before reaching this candle. So that's why, I get in once already, just in case, the market doesn't want to tap into this area here. All right. So just with that, I am in this trade with the potential that it drops now. If the market doesn't drop, I'll take another entry here, and then that'll be my 1% risk for the day. All right. So I'll attempt this point of interest about twice. All right.
Mm. Nice.
I'll go ahead and hop on the YouTube myself so I could peep the chat box as well. Okay. Yeah, I was just taking a peek at the chat box. Yeah, man, to each his own. Like I said, I'm not a big fundamental guy whatsoever. So, like, I trade what I see at the end of the day. So, um, whatever, regardless of what Powell said, I missed the speech completely. So, we'll see, though. It's all about taking a shot, man. You got to risk it to get the reward, right?
That's a fact.
We will see. But yeah, that's all I got, guys. Didn't want to take too long. But yeah, man. I will say this. I definitely respect fundamentals. I respect it 1,000%. But I was reading something interesting in this book, and it talks about fundamentals don't necessarily take into account the people that are moving the market the most, if that makes sense. So it may give you a general number, but if there's somebody that decides they want to take a huge position, then they're going to take that huge position regardless, right? So a general overall number of, say, unemployment or whatever the case may be, that doesn't necessarily have the same effect of on somebody if they decide that they want to take a trade, like on an institutional level or whatnot. So this is why there's times where you might see positive news or the negative reaction, or positive news gives you a temporary positive push and then reverses the other way. So, you know, I think Skaggs calls it shock numbers. And I do see how this Fed speech could be a little different, considering that they're talking about something long term in a sense. But, like I said, it's just my personal way of going after the markets. We all have our different methods of seeing what we see. So, just from my perspective, I would prefer to go based off of what I see, just due to the fact that, news kind of makes me uncertain in a lot of instances where it's like, okay, I want to see what happens. I want to see what happens, when I could just look at the chart and see what happens. And I don't really have to necessarily rely on an update or a news release. So, you know, not saying that it's definitely important, but you can have success by being a strictly technical trader, in my opinion. So,
Hmm. That's actually, I actually want to touch on that topic you just said too, because that is very true. How news can cloud what you're actually seeing on the chart. All right, because that's what I've been dealing with for the past, I would say, 30 days myself. Especially just going into the end of the year, right, with end of the year rallies and just seeing inflation starting to soften a lot. You start to look at the news and its sentiment, and you're seeing one thing based off news, but technicals is saying completely different, right? And that's where I've been for real, because it's been a slower month for me just because of that, right? Because I'm trying to decipher the news, but I'm also trying to play what I'm seeing, and it's been very conflicting for me because now I'm stuck in my mind like, yo, what should I do? Should I stick with my long term bias, or should I stick with what I'm just seeing right now? So,
mhm.
so that is very true what you said. News could definitely influence your decision making because now it causes you to overthink things for sure, and that's really what I've been dealing with over the past 30 days or so for sure. Um, but yeah, just to touch on that point, that is very true. All right, big shout out to everybody that helped us get 100 likes. By the way, I appreciate y'all. We love you guys. Thank you guys for getting us those likes.
Yeah, thanks, family. Definitely
Yeah,
appreciate that.
honestly, what's crazy is like I kind of trade with the mentality that I trade like as normal, like as if news didn't even exist, kind of like how Ray is, and like I feel like the news sometimes speeds up the technicals, like so it's like at the end of the day, it's like technicals and news, they all follow the same story. So, the news is just the excuse to move price faster in the intended direction that it was going to go. So, honestly, that's why like a lot of the time you guys see me take trades right before news or during news or something like that. It's because like honestly I don't care about the news. Like unless it's like a very high impact news, all right, then yeah, you might want to be a little bit more careful. But if it's just a regular CPI or like, you know,
CPI is not a regular event, my boy. CPI is one of
I
the
mean, it's
major
not a
ones.
regular event, but I guess it is for me. Like, I kind of
I mean,
normalize.
and this is really just gonna come down to preference, right? Because I truly believe most technical traders that are solely relying on technicals, 99.9% of them are unprofitable. It's that 0.1% that's able to really be profitable off of solely technicals, right? There are out there. But I wouldn't say, and again, it's just, and everybody has their own thoughts and opinions, right? But for me, I can't trade without understanding news nowadays. Like it's very hard for me to trade without at least having some type of a bias in mind in terms of news and data, because that's what's really causing smart money to make decisions. That's the reason why they're buying or selling at certain levels. So it's hard for me to not take into account news now, right? And that's just again me and my opinion, right? But I've also had a tremendous year this year because of my understanding of news, right? I've if I compare my best year when I was solely trading off of technicals and my best year when I understand fundamentals, which is this year completely has done way better than my year just trading solely technicals. And I think it just, and again, I'm just speaking for myself, right? It just brings a level of confidence in yourself, especially when you understand what the hell's about to happen, right? So, again, it's
So do
just,
you feel like it brings you a higher level of comfort. It's on, like, in my eyes, this is the way I look at news, right? And not, like I said, not all news, because it is important, especially for the macro scale. But I feel like in terms of finding a position, it's almost like Fibonacci, right? Where people have more comfort because they can visibly see the percentage on the screen versus just looking, using their own two eyes to see, okay, this is a steep retracement. I don't need to see 61.8 or 78.6 to know that that's a retracement. And I kind of look at it the same way because, how many news events have we seen where the market doesn't go as anticipated? And then you would necessarily, like, sometimes we put a fence up in front of ourselves because there's a news event, versus if we just look at the technicals, we would have probably capitalized off the news event
Literally.
versus being afraid of the news event. So for me personally, I know that's a where volume is coming into the market. So me being a smart money trader, I like to trade when the market is volatile because that's where institutions are active. So I don't want to trade in consolidation. So I look at that as an opportunity more or less to advance my technicals because I trade where the volatility is present, because that's essentially where smart money is at. Smart money traders are, institutions are mostly active. So if I get like a large buy candle, while a lot of people are afraid to sell it, I'll probably sell it because I know that they're buying to sell. And more than likely, they're going to do that during a news event. So, I'm looking at it more from a technical perspective because you know, I get it. I get it, especially when it comes to the macro scale. I do think there's things that you can, benefit off of. I mean, like the DXY, for example. I mean, the way it's been moving since the beginning of the year is something that is important to understand. But when I wake up every morning looking for a trade opportunity, I don't feel like I can necessarily rely too heavily on the news, especially if I'm looking at a daily, like at a day-to-day perspective trading. Now, if I was position trading and stuff like that, and you come from a swing trading background, so I feel like that's probably another reason. And you and Skaggs especially, I mean, we see Skaggs hold trades for 2 months, so if not longer. So I feel like with that perspective, when you're trying to see, okay, should I keep holding this position trade? Then definitely technicals are going to be, something that, benefits your analysis. But I mean, bro, I trade on the 1 minute, I trade on the 5 minute. Like, I'm getting my percentages knocked out in session, and then I go on about my day most of the time. So, that's just, the way that I analyze.
Yeah, I
But,
mean, yeah, I definitely get what you're saying. You're just pretty much referring to the news probably having more importance for just the macro outlook, the longer time frame plays. Where since you're on the smaller time frame, 1 minute, 2 minute, 3 minute time frames, since as long as there's no active news, you should just trade what you see. I think because the smaller the time frame, I believe that's what you're pretty much referring to. And I mean, yeah, I mean, I definitely get what you're saying for sure. Because obviously, if you're playing such smaller time frame cycles, and there's really no news around or anything like that, then yeah, you got to just trade what you see off the technicals. But I also truly understand that even on a smaller time frame, even on intraday cycles, the markets are moving based off the sentiment that smart money has around the data, regardless, no matter what day it is, no matter what type of setup it is, no matter what time frame setup it looks like. Uh, and for me, I have seen so much more success understanding the overall fundamental aspect and sentimental aspect, even from a smaller time frame scenario. Like, even if I am looking at setups from the 15-minute, the 5 minute time frame, as long as I have my overall bias in tow, I'm still pretty good. Now, in terms of the data and in terms of say a news release coming out, and technically it should have went bullish, but the markets reacted in a different light, that could have been just to again do things like those grab liquidities, right? There's a lot of different factors that happen, but I truly think that the market moves around news with specific intentions in mind. I don't think it just moves randomly, right? So if it does go against what should have happened, there's most likely a reason for that, right? Which again, it could have just been just to grab liquidity, get it priced into a more liquid area for them to actually go ahead and place all their orders. There's just so much to it, right? But
Now, I like what you said there. Let me ask you a question on that,
mm,
because there's three types of analysis. Obviously, we have fundamental analysis, which is the actual news release itself. Then you have technical analysis, which is, you know, the charts and the tools and stuff that we use.
yep,
Then you have sentimental analysis, right? Which is essentially more opinionated. At least that's how I learned it
hmm,
years ago when I was back on baby pips, right?
yeah,
It's more of an opinionated outlook on the markets. So if we're coming into the markets looking at sentiment, how would you necessarily know what the smart money sentiment is based off of the fundamental sense or fundamental outlook? Because the smart money sentiment doesn't have to coincide with the fundamental releases, if that makes sense, because it's all opinionated. So if the fundamental releases are a grand outlook, like a general outlook, say there's 1,000 people and that's the general outlook, there could be three people that have billions of dollars at their disposal that think differently, and they have the ability to move the market against whatever the fundamentals say.
hmm,
So if the fundamental has an effect on what you feel sentiment wise and they don't have to match, how do you necessarily know without looking at the technical side of things? Because if sentiment is more of an opinion and fundamentals is more of like the actual news release,
yeah.
I feel like the technical is what kind of brings it together, because sentiment is more of an opinion, not really based off of what the numbers
Yeah.
have to say, if that makes sense.
No, I definitely get what you're saying. And just to even, I mean, you're making some good points, but isn't technical all opinion based as well? All right, because if we really look at the forms of analysis, fundamentals, we really should be referring to fundamentals as the actual facts, what the data actually comes out as, where the sentiment is just us trying to come up with a bias before that, just like how we do with technicals, right? Technicals the same thing. We're over here just coming up with, ideas as to what we think price could do. Same thing with, sentiment. So the biggest thing I think that I pretty much just learned is fundamentals is going to be the facts that come out. But in order for us to actually correctly predict the facts, we have to use sentiment. And sentiment is really just derived by all the factors that influence these markets, right? Like you think smart money, like let's use, I mean, inflation for an example, right? We've had runaway inflation this entire year. So is it possible for one smart money player to, be bearish the dollar while everybody else is bullish? Sure, it is possible. But what is the overall driving factor of this market? How is people going to react? How are investors going to respond to the facts that are coming out? Right? Yeah, you want to use sentiment to try to be ahead of the market, but when the facts come out, the facts are going to come out, right? Ain't no smart money trader or investor going to be, bearish the dollar while inflation is running through the roof, right? It's just more so like using common logic at that point and really predicting what these smart money traders are going to do based off, again, just common logic, right? If we know that interest rates are going up, which they have been, every single smart money trader is probably going to be leaning towards a similar bias, just because they understand how interest rates going up is going to affect asset prices, right? So it's like a combination of things for sure. But if
Mm-hmm.
but if we want to use sentiment as just opinion based, I mean, so is technicals, right? Technicals is all opinion based at the end of the day.
Yeah, yeah, you could
Listen,
definitely
I think
definitely
you
have
guys
that.
are leaving out a crucial part of this. And that's like, again, like I don't consider myself a fundamental trader. I consider myself a rumor trader. Right. This is where most people mess up with fundamentals. They only care about the fundamentals that are out. And I've said it on this channel and I'll say it again. I'll continue to say it. Once the news hits the market is no longer playing that news. It might temporarily play it that day. It might, continue the momentum throughout that day, throughout that week. But typically the markets are forward looking. So if you want to master fundamentals, you have to become a master in speculation and rumors. You have to know how to read between the lines. Again, all my long term trades, my long term EU buys, again, was off the idea again, going into holiday rallies, which I know is legitimately a thing. I've seen it over the years. All right, stagflation, being able to identify that, being able to identify the rumors of a 50 basis point hike, and knowing how to play that in an environment that may appear to still be hawkish. It's the rumors. These people they're playing the rumors. They're not playing the results. They're not playing the result. And I think what people have to realize too is you got to get like, this is what I hate about smart money concepts, because smart money concepts makes you believe that all the big players that have billions of dollars make the right decisions all the time. This is not true. This is not true. Big hedge fund eats little hedge fund all the time. Funds fail. People are wrong. The smart money is I don't even like the term smart money, because some of these people that have big money, they're not smart. They're actually incredibly stupid, right? So they don't, just because you have money doesn't necessarily put you in that smart money category, right? So you can't be like, oh, if there's a guy with $1 billion decides to buy that, it's irrelevant, because that person with $1 billion can still be wrong, right? So like, that's not what you should be playing off of. You again, you guys, if you want to trade fundamentals, you got to ask yourself, okay, first off, let's find out where we are, right? So in our current state, right, where we currently are, all the facts that we know that these guys have been talking about. Yes, we know that Powell said, again, we know that the 50 basis point hike is likely, solidified, right? For the most part, right? We know that CPI is on a downtrend, right? You got to be asking yourself, not how does this impact the market now, but what is coming out in the future, and will that reinforce this idea, or will it not reinforce this idea? Right. This is why I'm always forward leading. You have to be ahead of the market. Like everyone now is looking towards December 14th meeting, which is great, because that's what you see the markets reacting to that. The markets right now are not, they're playing Powell's comments, because Powell's comments are directly linked to the December 14th meeting. But that's why things are so aggressive, is because people are positioning themselves before that news. If you're just playing the fundamental releases and you wait until December 14th when they do the 50 basis point hike and everything shoots, and like that's the day you wait to buy, you're incredibly late to the market. I mean, like you can already see that if that's your plan, is to wait to see what the Fed is going to do, it's going to be far too late. EU is going to be way, way, way too high by then. You're going to already be taking this liquidity by the time December 14th comes around. And at that point, yeah, the market's going to be more logical to falter off. Why? Because on December 14th, the market is not going to care about the 50 basis point hike anymore. It's going to be forward looking to what's coming. And what's going to be coming is going to be a period of time where we need to consume more data, right? We need to see what the next CPI rating is going to be. We need to see this, and that's when the market can have time to fade off. So you guys got to stay ahead of the market. You can't be up to date with the market. If you're up to date with the market, you're late. It's like when the people say, if you read the newspaper, you're uninformed, right? You're uninformed.
I like that.
That's a bar right there.
You got to stay ahead of news. You cannot be up to date with news. You have to learn how to speculate, read the rumors, read between the lines. You have to be comfortable dealing in the unknown. So technicals give you, when you're trading on a technical basis, you're looking at the market like, okay, if I get these things, I'm going to take a trade. That's not how you can handle fundamentals. Fundamentals, you have to say, okay, this is all the current data, but this is what the data might be in the future. And that is not going to be easy at first. Like, in order to even trade fundamentals successfully, you need to pay attention to fundamentals for a full year. Because you can't speculate on what CPI is going to do if you've only ever seen 2 CPI readings, because you have no idea. You have no idea about how the market reacts to CPI in different situations. Right? So fundamentals, it takes longer to learn. You have to actually see events. There's fundamental events that we've traded that are what you consider like black swan events. Things like Brexit. Things like, COVID and the money printing is not really unprecedented. Things like that have happened, but not in our lifetime. Right, so it's all speculative. You have to learn how to play the psychology of the people in the control of the markets, how they're going to perceive it, not how you perceive it. Nobody cares how you perceive it. You're not the big money, right? So just because you see inflation being a problem doesn't mean the bigger money sees inflation still as a problem, right? Because they might be forward looking. They see that it's coming down, and they want to position themselves early, right? Again, that's why when I was buying NASDAQ on the CPI reading, that's why I'm never letting go of my buys down here. There's no reason logically for me ever at all to close these positions. which is going to be annoying because at some point I do want my money, right? Like at some point I do have to close it. But like there's no real reason because again the market sentiment that was in action down here does not exist now and will not exist for probably potentially months to years because again we're not in that kind of environment. So again, when you're playing fundamentals, you've got to stay ahead of the market. You cannot be up to date. By the time that if like NFP tomorrow, people that are waiting for the NFP results to come out to trade NFP, you're wrong. You should have been playing NFP all week, asking yourself, okay, right, what was the last NFP result? Right, what is expected this week? And if it does come out at that, what's the expectation? Okay, if it comes out higher, what should I expect? If it comes out lower, what should I expect? And then take a look and say, okay, well, based off of this, based off ADP early in the week, what can we actually expect from this? And how can I position myself before Friday? So again, like when you guys are talking about sentiment and fundamentals, you have to lead it from like again from that rumors. You have to be able to stay what I call 2-3 weeks ahead of the market. Like if you don't know what fundamental events are coming out next week or the week after that, you're already behind. You're already behind. So that
So
would be
would
my
you
opinion on that. Most people, again, you guys play the result. You don't play the rumors. Learn to play the rumors.
so let me ask you this then, since again, sentiment a lot of times is more opinionated, do you feel like it's wise to look at the news that's happening like today and come up with a sentiment based off of that? Because I feel like you're like, I agree with what you're saying 1,000%, and I kind of just look at it technical based because you're saying there's rumors and things don't have, or they're not always what they seem, and that's essentially why I don't necessarily pay that much attention to them. But do you feel like the overall way that a lot of people may analyze sentiment needs to be adjusted due to that? Because it's like you're saying, if we look at sentiment based off of the numbers that are recent, then we could be behind. So do we fix that by not necessarily looking at the opposite end of it, but just kind of adjusting what it is that we think, in our opinion, based off of the news that's released today? So for example, like even your EU buy, like I remember it was like everybody's kind of nervous, and it's like, okay, CPI, should the market should keep dropping based off of the numbers, but you was able to see between the lines. And that's why you took that buy that's up like 1 to 100 right now.
Well, yeah,
So
it's because I asked myself again. I'm looking at this result, and like, yeah, like I'm pretty sure I even said it on that call. I mean, like, I've rewatched that call, and again, like, was my confidence as high as it is now? Because no, I have more supportive data now to again fuel my idea. But again, like a lot of what that position was when I took EU was, it's like I understand it's high, but I also understand it's not getting any worse. So then I ask myself, well, if it's not getting any worse, how is this perceived by the people that are quote unquote the bigger money or the smarter money, right? So how is this stagnation going to be reflected? And I mean, it's not difficult to figure this out because most times these banks will publish. Watch, look how easy this is. Watch, let me just do a search real quick and see if I can pull this up.
I don't know if
Yeah,
you want to share yours,
yeah, I'm just gonna try to pull this up real quick.
Okay, got you.
Um, yeah, so look how easy this is, guys. Like this is what I'm talking about. So look at this article, right? This is directly from JP Morgan's website, right? Stagflation is not here to ruin our economy once again. Here's why. So look, it like there's literally an entire article here. Me finding the actual excerpt from them. Let me just go back real quick. But like, look here. Right? So current fears appear overblown. Yes, inflation is rising, but we believe it will remain at a manageable rate. Look at the date of this, October 25th, 2021. This is the big money. This is the smart money. Literally telling you that yes, inflation is rising, but they believe it will remain at a manageable rate. This is not a secret. It's not speculation. Like, they are telling you this straight in your face. Now let's just go look. Let's just go look at when October 25th was on the chart, and let's see.
That's
If
of
you were paying
that's of
attention.
last year, by the way, Skaggs. That quote was from
Oh, was
2021.
it?
Yeah.
No, it said 2022, didn't it? Oh, it says 2021. Okay, hold
2021.
on. I know they put one out this year. Hold on.
And they were completely wrong, by the way, with that headline of last
Yeah,
year.
they were completely wrong with that.
It's just to say.
Well, hold
It
on though.
also
Hold
just
on.
brings it to the
Go
point
back
as
to
well,
that.
like, and
Is there an edited date? Because this might have been edited.
I don't know, but that just brings into the point again, that, like, how unprecedented these times that we're living in are, guys. We're talking about, like, we are dealing with
It's
times where even the economists, even the people at these large institutions, where some of them probably never even been through this, right? Last time inflation was this high was in the 1970s, right? 50 years ago. So it's also a lot harder to really predict sentiment and overall, biases from a fundamental perspective when we're living in a time that we haven't really seen in 50 plus years. Right? So that does make it a little bit harder as well to really figure out what the hell's happening.
I don't know. For some reason, I think this date is wrong, bro. I know for a fact I shared during that CPI reading that JP from something from JP Morgan's website. Maybe it wasn't stagflation, wasn't the right word to use. Let's see. Yeah, I'll have to go back in the chats and find the actual article. But I know for a fact they put something out around the CPI date that again led to my belief that they were looking to the buy side. But nonetheless, again, play off the rumors. The rumors are what will keep you. And again, rumor reading is not going to be. It's not going to be easy. I'm telling you, it's not going to be easy. You have to learn to think like the bigger money, right? Most people try to think like the bigger money only on the charts. Okay, well, because I'll tell you straight away, the bigger money is not using imbalances. They're not using order blocks. They're not using any of that to execute off their trades. That is the result of them executing off their trades. Or let's be clear, smart money concepts is not how banks trade. When people say, oh, learn smart money concepts and trade like the banks, they're lying to you. That's not how the banks trade. It's the result of the way that the banks trade, right? Is the correct way to phrase that. They will leave certain, quote unquote footprints. That's what accumulation schematics are. It's not the way that they trade, it's the result of the way that they trade. But yeah, that's my little rant. I know chat
That's a
is
good way to
probably
put it.
crazy
It's
with
the,
questions.
that's a good way to put it. The patterns, like the patterns that they leave behind, what they're most likely to do.
Yeah, it's their footprint. It's not an actual, it's not really what they're, if you think a bank is like, oh, we got to buy EU because it's at an order block, like you're delusional. You're absolutely delusional. The order block is formed because the bank did buying, not because the bank sold the order block.
Yeah, let
It's
me show
two
you guys this article
vastly
too, by the
completely
way.
different things.
Like, this article is probably the newest article from JP Morgan. It pretty much just talks about what you were just saying, how they're literally telling us exactly what to expect, right? So this is their economic and market insights for the week of the 28th, which was last week, right? And it pretty much just break down, guys, like their whole economic outlook, right? Just look at the headlines, right? We're not going to get too into this. Just look at the headlines of these paragraphs. U.S. economy likely to slow, enter mild recession, cool. But then we have headlines like this, right? Fed's hiking cycle nearing the end game. Terminal funds rate expected to reach 5%. This first half, right? Fed's hiking cycle nearing the end game, right? It's pretty much them saying, like, yo, we're eventually going to get a point where the Fed finally stops raising rates, right? They're giving us clues. It's these clues right here. Again, this is JP Morgan, right? One of this quote unquote smart money. And you could just continue to read all these headlines, right? Again, this is literally stuff that they do release, just like what Skaggs was saying. Like, they release all this stuff, guys. Pretty much every single week, they'll release like an update on what they think is actually going to happen, right? So look at this headline: Consumers enter 2023 on solid financial footing, right? Manufacturing sector headwinds are building. So it's just going through these headlines, guys, and really just seeing, what resonates and what makes the most sense, right? Like right here, inflation set to fall quickly from peak, but remain above the Fed's 2% target. That's kind of obvious, right? So like this is what Skaz was talking about, like really just going to these, smart money and seeing what their thoughts and opinions are, right? And I actually dropped this article in the chat for you guys as well. For those of you guys that are interested, you guys can go ahead and take some time out your day and go and read that if you guys really wanted to as well. All right, but that's
Yeah,
just
this says for the week of November 28th. Do they have like a date that they publish this on? Like, did they put this? I'm just curious if they put this out before Powell or if they just put this out after Powell.
Let's see. doesn't
No. Okay. It
say.
says for the week, so I would imagine at the beginning of the I would hope at the beginning of the week.
Yeah, I'm pretty sure it was.
It's if it's for the week. Okay. Yeah, I don't see any
Yeah,
actual date. It's all good though. I mean,
yeah. But they have all here, just like Sky said, like all these smart monies, they tell you exactly what they're looking for. All right,
the,
so
the Fed also tells you what they're looking for, right? Like the Fed will tell you if certain again, this is why we look at things like CPI, because if the Fed is again like everybody looks at like the one thing like, oh, they're at a target rate of 2%, so like they're not going to stop until they get to 2%. Well, that's drastically wrong. They're going to stop way before they get to 2%. It's just that the results of them, going high will eventually get them down to that 2%. And to be honest, even then, I think that 2% target is it might even be like a pipe dream. I know Abel and I talked about this before, where like maybe with how much money is being printed, maybe like, 2% is no longer the new norm because like 2% is like considered the normal inflation rate, quote unquote. So it is possible that the normal inflation rate, ticks up to like 2.5, 3. Maybe they don't push it down to the full two. These are all possibilities. I think that would be stupid of them to allow, but I don't run the Fed, so
yeah, it is a possibility. It's just one thing that he said too. Yesterday, he actually he was speaking about, and this is again pretty much going against what we just thought about too, because you just reminded me when you actually said that. But like Jerome Powell yesterday said that their goal is not to even get back to that 2%, but they actually want to see lower, right, 1%, which is kind of crazy CPI. I could be misinterpreting what he said, but as far as I heard, like he actually his goals is to get it even lower than that 2% growth.
I didn't see anything about that. But if that's true and they're looking to go below 2%, again, that's you got to take that
That's
into account.
yeah.
Um, I think that is I'll have to look into that myself. I definitely did not hear that. I mean, I didn't really listen to him. I just I saw the way the market responded, and I already kind of knew the gist of what he said.
Yeah,
Because again, I was kind of expecting it, but yeah, no, that's interesting as well. If they're looking to target below that 2%, I mean
which
that's a lot of tightening.
that's a lot,
And
and
not even a lot of tightening. That's so you don't have to continue to raise rates too tighten like that. You can just leave rates
yeah, leave them
high
high.
for an
Yep.
extended period of time. So that's what's confusing a lot of people too. Is like people are like, oh, well, if they increase the target rate or if they keep rates high, isn't that seen as bad? And it's like it's not technically seen as bad as long as the market again doesn't believe that it's going to get worse. And like the market doesn't care how long they remain high, so as long as they don't project for them to go higher and begin to move them at a more aggressive rate. So yeah, a lot of interesting stuff. Definitely nice week in the markets. I mean, beautiful week in the markets if you ask me.
It's definitely been
Somebody
very
did
interesting.
ask if I would be looking for sells on December 4th. So Eric says, so does that mean you're looking for shorts going into the 14th? Not on the 14th, but after the news hits, if we do spike to the upside, yeah, like whatever move happens on the 14th, if we do 50 basis point hikes, I would imagine because again the market is pricing that in now, and a lot of the activity you're seeing now is due to that. So by the time the 14th comes, if we are again still trading higher, EU's above 105, once that news hits, yeah, I'll look for what I call like after news fades. So like depending how aggressive it is, it might be immediately after news. If the market's reacting crazy, again, I'll wait for the next daily or weekly liquidity to get taken, and then yeah, after the 14th, I'll probably look to like fade it because at that point, again, once the news is apparent to everybody, that's when the bigger money can begin to use the 14th as a way to kind of like scale out, right? So maybe they backpedal off that trend, and then into the holidays, you kind of get this like weird dollar strength until like the end of the year, even though you got that 50 basis point hike, because again, there's nothing the market's looking forward to now because the market now, because now once you get a 50 basis point hike, you got to understand the Fed going back to 75 is deemed as like pretty unlikely. Like they're not going to go to 50 just to go back to 75. Like that's like part of that their decision and why they're waiting for like the appropriate amount of data before they do that, because again, they don't want to pull that trigger too quick and then look like they completely dropped the ball. So yeah, after 14th, I will look for reasons to kind of go back into the dollar because again, everybody at that point will be saying, "Oh man, it's time to buy, or it's time to sell, it's time to sell the dollar, it's time to sell." It's like, okay, well, we've already been selling the dollar. Now this news is out. You know, the likelihood is those people that buy or sell on the 14th are probably going to get trapped. So,
Hmm.
yeah, not immediately, but yeah, moving into like the 15th, 16th, if we're in some nice liquidity zones, you could probably bet that I'll be looking to again fade the result at that
Yeah,
point.
and just to bring up a good point too, I literally just thought about this right now. But you know how people say manipulation, 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 right? Where these institutions manipulate the market. Well, yeah, they manipulate the market to take advantage of the people that are unaware of sentiment, unaware of overall data. All right, so that's actually a very interesting point that you brought up, Skaggs. Where by the time everybody starts to look at things one direction, like say in the 14th, right? Data comes out that suggests indices strength, but the market does the completely opposite now because everybody's already expecting indices strength, and now that's the time for smart money to come in and manipulate the markets and grab all that extra liquidity, or at least take advantage of that liquidity to place additional orders that they wanted to go ahead and enter into. So I think manipulation only is really occurring to those that are unaware of fundamentals and sentiment behind the fundamentals more than anything. Right? Which
Yeah,
is
manipulation is often again, it's like I said, like the smarter money plays ahead of the news,
hmm
right? They spend millions, if not billions of dollars on people that research data, look at trends, have access to data that we don't even have access to. They also, can pay for access to order flow. They can buy, all that fun stuff. So they could see what the retail sentiment is very easily. Whereas like I use like Twitter and Facebook and just, you know, overall common sense to figure out what the quote unquote dumber money is doing.
yeah.
But yeah, oftentimes, like I said, they play the rumor, and then when the news hits, they'll use the fact that everybody now sees what they saw previously. They'll use you as what's people often refer to as like exit liquidity, right? Which is kind of why, again, too, like I'm gonna just hijack screen real quick.
Got
Why
it.
I keep telling you guys that, these lows on Bitcoin are where you want to be buying, because again, this is where most people are the most fearful, because again, most people are saying, oh, FTX is bankrupt, oh, crypto.com is going to fail, oh, BlockFi filed for chapter 11 bankruptcy, and they're using your exit liquidity down here at what's literally the lowest point that Bitcoin's been in years, to accumulate cheaply. And again, I'm telling you, I'm highly convinced these are longer term lows, or at least damn near them. I mean, these might get swiped again, like on this future 2023 move that retests it. Maybe it gets swiped if the trigger event is enough. But again, I would highly doubt it does. And again, I showed you guys the same example back with COVID, right? Where you have, again, this is where you are now. I'm telling you, this is where you guys are now. It's the same spot. And like if you're smart enough, you'll notice that the months are the same too. This happened in December of 18, right? So you're gonna expect a little bit of a relief rally. And then again, this is the COVID crash, right? So we're again, this is the same little stupid setup that we're looking at over here. Um, so take from it what you will, but again, usually big news. Again, the smarter money knows how to use news as exit liquidity, which is like the only way I know how to frame that. But yeah, that's all I really have for you guys. I don't know if these boys have anything else if you want to keep the conversation going, but I feel like we probably blew your minds. If you guys have been enjoying this session though, let me get some ones in the chat. Drop some ones or some fire emojis, whatever is more easily accessible to you
hmm
on the platform that you're on. But let us know if you guys been enjoying this little, fireside chat roundtable. Again, we all have varying opinions, and you guys will too. Like you don't have to agree with me. I speak from an area of confidence, but it's because I have my trading to back it up. Like again, you could believe the way you want to believe it with Ray and just go full technicals. You could be profitable that way. There's nothing stopping you. I know tons of traders that ignore fundamentals that are profitable. I do firmly believe they would be more profitable if they included fundamentals, but that's not my jurisdiction to make them do that.
hmm
Um,
I'm not even gonna lie. I think these type of discussions, we might have to make a segment on the channel just so that we do discuss a lot of data, a lot of news, not even just around the forex markets, but in general, like what's happening in the space. I think the community would love that and just love to see our points on these type of discussions. So we might have to make a segment on that alone. I think it might be cool for sure. Let's see.
Start a podcast.
Yeah, no cap. Like it could be like a podcast type of style where we have 5 to 10 topics that we see for the day, whether we find it on Bloomberg or it could even be anything around even entertainment. Just having these type of discussions and just having these back and forths is super valuable, right? Like I love watching you know uh, content creators that do this. So I know for a fact the family will definitely love it for sure. Let's see. This has been amazing looking at order books. Yeah. Now we appreciate you guys for tuning in. It was definitely a very, very good discussion for sure. All right. So without further ado, though, family, we do love you guys. We appreciate you guys for rocking with us this entire week. We will be back on Sunday for our weekly overview call. If you guys are not following any of our YouTube channels or any of our social medias, family, go ahead and make sure to follow the social media platforms. Make sure to be a part of the Telegram as well, because for the most part, a lot of our updates, family, with anything, right, whether we're going live or anything, is either going to be in two places: our actual website, theprofitsociety.co, which everybody can go ahead and join, or it's going to be in our Telegram, right? So if you guys do want to be updated on any of our calls, any of our trainings, anytime we do any round style type of conversations, just make sure to be in one of those two places, and you will be updated for sure. Right. So,
Actually, real quick, let me add to that.
mhm.
Guys, I will be doing some testing on the website tonight, so I'll probably be doing an Asian session Q&A. So if you guys have questions you guys want answered, stuff like that, I will be hosting that in the back end of the website. Obviously, all you guys need is a beta account. Just go to profitsociety.co, go grab your accounts. You'll have access to the live stream page. I will be posting when I'm live in the Telegram because I do have to do a little bit of testing on some stuff. So I will be doing a quick little Q&A. So if you guys do have additional questions, things you want me to clarify later, I don't know if any of these boys are going to be joining me, but I will be hosting that real quick, just probably about a half hour, maybe hour long session if there's a lot of questions. So yeah, I will be on the lookout for that in the Telegram. But yeah, that's all I wanted to add here at the end.
Yeah, for
Love you
sure.
all, and we will see you guys soon.
Yeah, appreciate y'all. And I mean, just one last update, family. If anybody did take that AU with Ray, that shit is in profit right now. Just throwing it out there before we get off. But family, I appreciate y'all. I love you guys. Thank you guys for rocking with us. And yeah, we'll see you guys all later on with our weekly outlook or inside of the community, family. Love y'all. Appreciate y'all. Have a great rest of y'all day. Let's get it.